Hey folks, how are you? We're going to do a little Sunday recap video. We're going to recap some of this week's trading action. I'm going to talk about some price action, key things I realized, and just a general rundown of what's going on, my win-loss ratio for the week, and I'll do some technicals at the end of the video just to kind of conclude it and get ready for the coming week. So let's get right to it today in today's video. Drop a like button if you enjoy these videos. This week was a very interesting trading week. Now, if you've been following my videos, you know that I'm currently testing a setup in the simulator, and I moved to trading futures contracts because I felt like they would provide a better trading vehicle for what I was trying to do. And I guess when it comes to short-term scalping, and it's a form of quantitative trading where you're kind of developing an approach and quantifying that approach into a few variables and then executing the variables on a consistent basis, right? So I'm not trying to be worried about everything kind of lining up and waiting for the most confirmation possible. I'm basically waiting for the variables that I have set in place for myself to be present for that trade to be executed. And if I notice that the trade is not working, then I will go back and fine tune those variables to something that will fit the conditions better. All right, so that's sort of what I'm working on now. So this week I took a bunch of trades. I think I had over 200 executions actually that I had done during this week. Now a lot of those were just test executions. Okay, so out of all those 200 trades, I would say 35 of them were the ones that I actually took like willingly. So out of 35 trades, my win to loss ratio was quite bad actually this week. So definitely there's some improvement to be done there. So it was 16 wins and 19 losses. And each of those trades had a measured stop and profit target. So basically each time it was about a 10-point loss on each of those trades. That's kind of what I'm planning to continue doing going forward, which is just trading this same method over and over again until I can see a positive win rate for at least a few weeks straight. And that's going to be it. And also it's about building confidence in the setup as well, because once you've built an approach, essentially you can start to trade it without having to think about it necessarily. And that's the goal, is just to develop that approach to the point where it becomes an automatic process where I just have to kind of identify the variables. And it's like a formula. Basically you have what you're looking for, and you don't have to sit there being nitpicky about how you're going to enter or why you shouldn't enter or why you should or shouldn't enter. Essentially, you just wait for those variables to be present, it fits your criteria, and then you trade it. And you do it multiple times to figure out if it's working or not, essentially. And that's the process. It's a nitty-gritty process, but you know, if you traders you're thinking you're going to make $1 million just by pressing the buy button and getting lucky, I'm afraid that's not how it works. If you want to actually make money long-term in this, you're going to have to sit there developing strategies and working them out for like many weeks and months straight. So that's my win to loss ratio for the week. So 16 wins, 19 losses, so quite bad. I have to work on that for the following week. Now let's go talk about some of the price action we got this week. Now, actually a lot of this week's price action on the NASDAQ was in fact trading range price action. So if we go look at some of those bars, and we'll look at sessions from earlier in the week, say like the 15th, Monday the 15th, you can see how off the open, Monday was a bull trend day, okay? And this day, I didn't trade much because it was the first day that I was getting used to trading with the tools I was using, okay? So I didn't trade much. I think I took a couple of counter trend scalps somewhere near here, and that was it. But generally, if you would have been buying these EMAs, you would have been making money all day. Next day, the 16th, was a trading range day, and you can see how in the morning we had this sort of trading range, and then we broke extremely bearish, and then we continued to stay in this trading range all day. So again, pretty wide range because there was this massive dump that occurred in the middle of the day, but prior to that there was a smaller trading range, and then, well, of course, a larger trading range. And based on how large this drop was, we stayed in the trading range the majority part of the day. Wednesday was also a trading range day, and you can see here how we started off the day with sort of a two-legged pullback, and then we resulted in a bull going into the afternoon, staying in that trading range. And if you zoom out, you'll see that since Tuesday we were in this trading range right here on the hourly time frame. So we were in larger term time frame and also shorter term time frame trading ranges for the majority part of the week. And I think that that's kind of what I got wrong, and that's something I'm going to focus on. So generally, there's two types of markets. There's markets that are trending, and there's markets that are not trending, aka in a trading range. So when the market is in a trading range, your trading style has to adapt slightly to the conditions of that market that you're in. So if the market's in a trading range, you're probably going to be looking to fade the extremes of the trading range if the tape is confirming that there's not a likely chance that the trading range breaks. And that's why using a volume profile is a good indicator, because when the market's in a trading range, the point of control, aka the point where the market's trading the highest amount of volume, this is going to be where the price tends to hover around. So in a trading range, when the market goes further away to the extremes of the range and you're not seeing follow through, that sets up a potential failure to fade back to that point of control area near the middle of the trading range. I think that that's kind of what I got wrong this week, is that I should have been realizing that when the market's in the trading range, we're likely to stay in the trading range and until we can see continued pressure to break out of those trading ranges. And it did happen a few times where lots of traders got trapped on one side and then the trading range finally broke and saw follow through. So that would have been an example of, for example, I think it was on Wednesday or Thursday where we saw that type of action. And also on Friday, we did see that action towards the middle part of the session. The shorter term trading ranges broke after there was a slight imbalance in the market. But again, the longer term trading range still intact. And you could see that we're making higher lows on this hourly chart. Two things I learned this week. One of them is relating to the question of, is the market in a trading range or is it trending? And that should be a simple question that you ask yourself when you go to trade any market. Is this market trending or in a trading range on whatever time frame you're looking at? Okay, and I think it's important obviously to understand the market from multiple time frames. Always look at your daily, hourly, and 15-minute charts. From a technical analysis standpoint, it's important to understand if the market's in a trading range or is it trending. And when it comes to my trading setup, that is actually the first variable, which is the trend, if there's a trend or trading range. And I'm gonna fix that. And again, every week I'm fine-tuning it. So right now it's set to just trend, but now it's going to be trend or trading range. All right. There you go, boom. All right, the next point that I learned this week, because as you know, I'm focused on mainly fading failed moves. So when you see a breakout and then another attempt and a failure, generally I'll fade that type of move in either direction. But the thing with those types of moves is that if you get so concentrated on trading a failure to move up or a failure to move down, sometimes you can get confused with what is also known as a retest of a price. So when you see a move up or down, a lot of time you'll see a retest of a price. So for example, here, this makes sense on especially shorter term time frames. If you have a break of a range, generally what happens is the market tends to retest the break point quite often. So sometimes if you're looking for the market to break and then fail, you need to understand if that break and a fail is actually going to be a hardcore failure or if it's just a retest. And that's why it's important to watch the tape when the market breaks and when the market comes back to retest. So that would be my second point this week, which would be differentiating between what is a failure and what is a retest. So there you have it, guys. The difference between a failure and a retest in price action. Two different things. All right, last thing I want to just touch on is the use of a volume profile. Okay, so right here, guys, you can see this is a volume profile indicator, which generally tells you the amount of volume taking place on a vertical standpoint. So here at the bottom, you can see I have a volume moving average and the volume is distributed throughout all these bars. So sometimes you can see if a certain bar has above average volume, which makes sense actually, and it works quite well if you look at it on a daily or hourly chart. But I think that the volume profile actually provides a great indication sometimes. What tends to happen is that these high volume nodes here, the prices that trade a lot of volume, they tend to act as a magnet for the price. Now, again, getting back to trading ranges, is when the market's in a trading range, these high volume price areas tend to act as magnets. So when we move to the extreme of our trading range and we're not seeing follow through, it becomes more likely that we're going to come back to that point of control and get back into the trading range, okay? And it depends if there's an imbalance, if there's traders that got trapped near the extreme of the trading range, then the odds can actually increase that we go towards the lower part of the trading range. So again, this is all just sort of concepts I'm working out and using to fine tune my variables for trading these types of setups here, okay? And again, trading range or trend, that's all. All right, guys, so I think that's gonna conclude it for today. I'm gonna do some technical analysis on the daily chart just before we finish the video. So let's start with the S&P 500. It could be said right now that we are in fact looking for a daily higher low to form above 2923.75. If you zoom out and look at the 4-hour chart, At the end of Friday, we were on the brink of losing our 4-hour higher lows here at 3063. So depending on where we open the future session tonight, we will see if this was a failed break lower or if we're going to see a continued bearish move towards our support zone of 29.23. Now, as you can see here, looking at the volume profile, above this 3108 was our previous point of control, and now going back down, we have all the way to 29.50. We also have 3006 approximately. So these are both high volume areas to keep an eye on as we come down to test these lows if we get there. Okay, so again, SPY looking for some sort of a daily higher low because it looks like this 4-hour trend was getting lost at the end of Friday. Again, tons of space to work with for a daily higher low here, and it makes sense that if we do form a daily higher low, it does seem likely that we could continue to stay in this trading range here for a while. And even if we do see continued upside, we would still in fact be looking for a weekly or a monthly at this point lower high opposed to our all-time high. And again, looking at that longer term chart, it does seem likely that we could stay in a trading range. So let's look at the NASDAQ. NASDAQ being a lot stronger and looking like, based on the weekly close, looking like our weekly lower high could in fact be set, although not too convincing at this point because we have not even lost our 4-hour higher lows yet at all. So as long as we hold these 4-hour higher lows, 98.6650 and then 97.8650, if we hold those, bulls remain in full control in my opinion. Just taking a look at the volume profile, you can see that high volume above these 10,000 prices, way more above average than anything else. If we look at the volume profile from here, you can see that even if I get rid of all the past price action, the highest volume has been taking place at these prices so far. So definitely this is a very key area to be watching. If we lose these 4-hour higher lows, then we will be looking for a daily higher low to form above 93.6825. So the bulls have a lot of space to work with there. And just look at how the market has been respecting these 12 and 26 period exponentials on this daily chart, as well as the 4-hour chart. We had 1, 2, and we'll see if we hold on the third attempt here. Again, it's going to depend on where the futures market opens. All right, let's look at the Russell here on the daily chart. You can see that it looks similar to the S&Ps, as we are in fact looking for a daily higher low above 1318.6. So looking at that 4-hour chart, you can see that we were on the verge of losing the 4-hour higher low. So if we lose that 4-hour higher low, then it looks like we are consolidating on that daily time frame, looking for a higher low. Let's glance at the volume profile, and you can see that there is some high volume nodes down here at 1346, 1330. So keep an eye on those prices for potential support. And again, looking at that daily chart, it does seem likely that if we pull back for this higher low and then continue higher, that there is a likely chance that we could stay in this trading range for the next few weeks, especially if we see volume start to drop off. One thing to remember is that the market bulls don't necessarily need bull volume to go up, but they do need bear volume to go down. So if we don't see bear volume, then it's likely that we could continue in this trading range and potentially just keep going higher forever because stocks go up. Just kidding. We'll just briefly look at some of these tech names. You can see that Apple's been trying for this resistance about 3 times now. We did break to a higher high on Friday, but with a lower close. So we'll see where we open next week here. You can see that Apple is very strong on that weekly time frame. And as soon as we lose this daily trend, if we ever do, we'll be looking for some potential daily consolidation to happen. But no sign of that yet, as long as we're holding this 12 exponential moving average as support. Looking at Microsoft, same idea, holding that exponential moving average as support. If we close below it and start losing it, then it makes sense that we could see a potential shift here. So we had a break to a higher high on Friday, but a lower close. So if we break the low of Friday tomorrow, then it makes sense that we'll obviously likely stay within this trading range. So looking for a daily higher low above 184. Amazon, similar idea. We had a very tight trading range on Friday, and you can see that we are near the top part of this trading range here. Things are starting to tighten up here quite a bit. If we break the low of Friday tomorrow, then chances are we're likely going to consolidate for some sort of a higher low. And we're looking at 2503 at this point as the nearest support, and then we have other higher lows. So keep an eye on these 12 and 26 exponential moving averages on all those big tech names, because they've been holding as support for quite some time. But when they stop holding as support, then it makes sense that there could be a shift in momentum in the other direction. So we'll see what we get. Watch volume on the bear side, because bears need volume, bulls don't need volume. And that is it, guys. So I wish you a fantastic day. All the best. Take care. Bye.